Thank you for joining the Small Business Bootcamp this morning. We are going to let everybody load into the Zoom app, and we will get started momentarily. Good morning, and thank you for joining us today for the on this Thursday morning, December 10th, for the ACA Small Business Bootcamp and Resource Collective. I am Robert Theobald, Small Business Ombudsman and Vice President of Small Business Services for the Arizona Commerce Authority. We are grateful to have you today. Hopefully the rain hasn't impacted you too much, but it's great to have some rain outside and get some moisture throughout the state. We want to first start by thanking all of our community partners. Without these community partners, we could not have these bootcamp sessions. The expertise that they provide has been tremendous, and their time and effort, so we thank them very much. The Small Business Bootcamp and Resource Collective is designed to help small businesses work through the COVID crisis and return stronger than ever. It is a statewide initiative supported and brought to us by our community partners. As I mentioned, their expertise is amazing. And the bootcamp is going to continue through December, so through next week, and then we're going to pick it back up in January, the first week of January, January 5th. So we're going to continue this into 2021, and we have a lot of great partners already committed with their content for January, so you're going to have a great start to the year. The Small Business Bootcamp and Resource Collective website is a tremendous tool. On that site, you can sign up for the upcoming sessions, or you can go back and review the previous sessions. At the bottom of that website, we have all of our previous sessions archived by week, and you can go back and search through those and find sessions that you may have missed that have content that will help you and your business. We've had many community partners also refer people to different sessions to review things that will help them. It's a great resource, and we encourage you to look back through that. With 105 sessions, including today done, we've got a lot of information that can be used for your business. Also on that website, you'll find the link to the Resource Collective webpage. And this webpage has the tools and resources brought to us by our community partners. A lot of great resources available to you on the Resource Collective page. This is a sample list of some of those items you'll find on the Resource Collective page. These are guides and tools available to you for all different industries to help you work through the COVID crisis and return stronger. Some quick updates as well. For restaurants, there's a Safest Outside Restaurant Assistance Program. We're going to post the link in the chat box. So all these links on this page be available on the recording afterwards, but also we will post them in the chat box so you can access them. We had a great webinar yesterday for restaurants on premises extension. And we also had Ben Blink from the governor's office come on, and he talked about this assistance program. Had a great Q&A. If you're a restaurant and you're interested, and if you've applied for this, but you missed the webinar, there were a lot of great resources that Ben shared about this program, and I highly encourage you to go back and watch the recording of it yesterday to see the information he shared. There was a lot of great updates and things that many restaurants may have missed in their application process. So I encourage you to go back and look at that. Additionally, the Economic Injury Disaster Loan Program, based on the early SBA information, the program will be ending for the COVID crisis on 12/21. The EIDL is actually a program that goes on for many different disasters, depending on what they may be. But the COVID portion may be ending on the 21st, based on the early information. I will have updates on next week's boot camp. I've reached out to the SBA for clarification just to make sure, but on the early information, the 21st was the deadline. With that, the EIDL, so the Economic Injury Disaster Loan FAQ, is a tremendous resource. I was going back through it this morning, and there were some updates on there that I hadn't seen, but one of the great questions was what if I need an increase on my EIDL? And there's information on there on how to do that, who to contact. So if that is something that your business may be looking at, I would highly encourage you to go to that document, review the information, and reach out to the contacts listed. Another way to stay informed and updated on the information for businesses across Arizona related to COVID-19 is our COVID-19 business resources website. We have a big link to that on our homepage, right across the top. Great resources there, and we update it constantly. Just a quick reminder about the ACA programs that can help support small businesses. We have our small business services. We provide the boot camp. Work on digital small business academy. We've got to help navigate through the SBA and SBDC. For example, today we got some local banking contacts on this presentation, so we're excited about that. Some local lending contacts. Our workforce division can help with employers that are looking to hire or upskill their employees. And our manufacturing extension partnership, Arizona MEP, can work with manufacturers at all different levels to help support them in their growth and dealing with COVID-19. Additionally, excuse me, at this time, a lot of people are looking to start side gigs or start their own business as well as we come out of this. And the small business checklist is a great tool to help those looking to start their small business. It's an online interactive resource, and it can help support licensing, registration, compliance questions, business planning, development, etc. You can find that at azcommerce.com/smallbiz, B-I-Z. Excuse me. So a reminder for the state's COVID-19 information resource page, arizonatogether.org. Great resource. Additionally, our upcoming sessions, these are the sessions that will round out the 2020 and lead us into a kind of a holiday break for 2 weeks. But we've got our small business funding opportunities today. Next week, we have how to increase your Google and Yelp search rankings. It's gonna be a great session. We haven't talked about Yelp yet, so it's gonna be great to talk about how we can help the Yelp rankings for businesses. And then we have navigating business loans during COVID-19. We've got Ellen Curtin from the PIMA Small Biz Development Center to talk a little bit about relationships with your lenders and bankers and the challenges going forward as we work through the lending process. So today we've got great speakers with us. So we have Amber Cordoba from Prestamos, Carrie Davis from CIC, and Leslie Pinter from Growth Partners Arizona. They're gonna share with us some great information on alternative lending products that a lot of people don't know about, but they're great products that small businesses can take advantage of and use. And so with that, we're gonna go in the order of Leslie's gonna kick it off, and then Carrie's gonna share her information, and then Amber's gonna help wrap it up. And we will have some Q&A at the end as well for all three of them. If you have questions, please use the Q&A button at the bottom of your screen. Post your questions there, and we will get to those either throughout the session or in the Q&A session. But Leslie, we'll go ahead and I'll stop sharing and turn the time over to you to get started.
Great. Thanks, Robert and Lisa and Faith, for having us today. This is always a good chance to, I always like to see Amber and Carrie, and it's a good chance to share great information with all of you. So let me start my slides here. There we go. So I'm the executive director of Growth Partners Arizona. Growth Partners Arizona is a nonprofit organization. We are mission-based. We're also a community development financial institution certified by the U.S. Treasury.
Hey, Leslie, you'll need to share your screen. We're not seeing it yet.
I thought I was sharing. Let's try it again. There we go.
Yep.
Okay, there we go. Does that work?
We are good. Yes. Thank you.
All right. Thanks for letting me know that. As I mentioned, we're a mission-based nonprofit organization. We're a community loan fund. We're certified by the U.S. Treasury, and our mission is to serve nonprofit organizations and small businesses who are underserved in Arizona from a financial and lending standpoint. We're affiliated with the Business Development Finance Corporation, which is a large statewide SBA lender. And so we partner together and have very complementary loan programs. And so if you call them, they may refer you to me. If you call me, I may refer you to them, depending on the loan program that best fits your needs. I do not do SBA lending, but my partner organization does. So as I mentioned, we're mission focused. And so what exactly does that mean? Well, we know that small businesses, and it's become particularly acute during the pandemic, where small businesses were trying to reach out to their banks to get some help, either for processing PPP requests or just loans in general. And so sometimes that doesn't work out very well. Banks have traditional banks, and I'm a recovered banker of over 30 years. Banks sometimes struggle with supporting small loans because it's just not very cost efficient. And oftentimes small businesses don't meet the exact criteria that a bank has. Maybe you don't have enough collateral for your loan, or maybe you haven't been in business long enough, or maybe your credit scores don't quite fit their minimum requirements. And that's where organizations like Growth Partners Arizona can help out and help get you to the point where you can go to a bank in a few years. That's our goal. We have 3 loan programs. The first is our nonprofit loan program, and frankly, that's how we started. When Growth Partners Arizona was formed, we provided loans only for nonprofit organizations. And nonprofits have their own unique challenges in being able to borrow money if they need to. So this is really our core program. And I don't know how many nonprofits are on the call today, so I won't spend a whole lot of time here, but you can find out more information about those programs on our website. The one I really wanted to talk more about today is our Small Business Success Loan. We launched this program, frankly, the week of the pandemic, closing everything down in March. And we've seen some good success so far in being able to help small businesses across the state access capital in smaller loan amounts. We focus on loan amounts $10,000 to $75,000. Minimum FICO score is less than what many lenders require. And many lenders don't operate in that small loan amount anyway. So we do not work with businesses that are just starting out. We don't do startup loans, but we can help early stage organizations. And there's other programs and other organizations that will help startups. I guess one of the recommendations I would make to everybody is no lender is the same as another lender. Banks all focus on different things, even alternative lenders like Growth Partners Arizona, and I'm sure Amber will talk about it in a little bit too. We all have our specialties, we all have our areas of focus. So if you're out seeking financing, make sure you call around and check to make sure that you can find something that fits what you need, and lenders that work in the areas that you need. So that's one key tip for today. And then the other program we have is a partnership with Community Investment Corporation, and Carrie's really going to talk about this in more detail when we get to her part. But this is a great opportunity for folks who are maybe starting up a new business and are looking for loan amounts that are very small, $15,000 and less. And it's a really unique program and unique way of obtaining loan funding that's very different from your typical application. So I'll let Carrie talk about that when we get to her part. But I wanted to talk a little bit about how do you get to the point where you can go ask for some money, and what do you need to do to be best positioned to have success in that? And so you need to think about a few things. And I know that a couple of these questions on this first slide may seem a little silly or obvious, but we often get applications that aren't very clear on these things. And sometimes the answers aren't as clear as it might first seem. Why do you want to borrow the money? the answer of, my checking account is low and I've got to pay expenses is not a really good answer to that question. You need to dig a little bit deeper in terms of understanding what has caused the need for you to borrow money. Ideally, it should be for a productive purpose, meaning that it's going to help you generate revenue. It's going to help you grow your business, expand, something that's going to create value and create the ability to repay the loan. So for example, if you need to borrow money because you have to invest in new equipment to grow your business, or you need to borrow money because you need to hire some people and you have to, or you've got purchase orders that you need to fulfill and you have to have an advance of cash to be able to fulfill the purchase order to get your revenue. Those are good productive purposes for borrowing money. If the answer is, I need to pay my past due utility bills, that's not a productive purpose, and you'll need to, and you can certainly talk to somebody like me or anybody on the call today about how you understand that a little bit better about how your cash needs have come up. And then you need to think about what collateral you might have to offer to secure the loan. Some lenders will do unsecured loans. My organization does not do unsecured loans to small businesses. So think about what collateral you might have to offer. And then make sure your legal organization papers are in order. You're going to be asked for those because a lender preparing loan documents is going to need to know exactly how your organization was formed. Is it an LLC? Is it a corporation? Who are the owners? Who within the organization is authorized to sign documents and make borrowing decisions on behalf of the company? That may seem kind of silly if you're a single owner, but you still have to have the legal papers in order. And if you have partners, you need to have some clear instruction as to who is authorized to do what on behalf of the organization. You need those sorts of things if you're going to open bank accounts. And so same thing for lenders. Then how do you expect to pay the loan back? Again, might seem like an obvious answer. It isn't always obvious. But be prepared with an answer for that. And then you need to show the financial ability to repay historically. Granted, 2020 is a unique year and it has thrown everybody off and into a tizzy. And so lenders are trying to figure out, well, how do we assess a current business? How were they doing before the pandemic hit? So you need to show us how did the organization look? What kind of revenue were you generating? And then what's happened this year to your organization and how have you pivoted or adjusted to prepare to survive and then rebound and come back? Projections for what you think 2021 are going to look like, because lenders obviously look at historical, but we want to know, what does your future look like? Tell the story about your organization. What are you doing as a leader of your organization to make sure you can return stronger as you get through this? So it's all about the story. It's not just about throwing a piece of paper to a lender and saying, I need X dollars for a loan. You need to help us go on that journey with you. For long-term sustainability and for organizations like mine, my goal is to help you become stronger financially, more sustainable financially long-term, so that you can go to a bank and get a loan through those resources as well. So you need to to set that in motion now as you're growing your business. Find a bank you can build a relationship with. I'm sure many of you experienced some challenges and maybe not some challenges this year as you applied for PPP and you worked with your bank. And some of you may have had great experiences with your bank and some of you may not have. And so it showed how important it is to have somebody you can work with at your bank. Organize and maintain your legal records so that they're at your fingertips and you know where they all are and you can get them at a moment's notice. You really need to establish good financial records as well. May mean that you need to purchase some accounting software. I'm working with some businesses who are still young and haven't grown very much yet, and they're doing their financials on Excel spreadsheets. Very common, and it's not a bad thing, but as you're thinking about growing and getting your business more strong, you want to make sure that you can establish some sort of accounting software. Maybe you need to hire a bookkeeper. Maybe it's time to do that, because you need to be able to, at a moment's notice, be able to give financial statements. And then you need to understand those financial statements and what they're telling you. And most of all, as you're learning and growing, and probably most of you, the financial piece of your business is not where your expertise is, of course. Your expertise is in the business that you run. Our expertise is in the financial piece. So seek out people like Amber and Carrie and me, like the resources at the Commerce Authority, like the Small Business Development Centers. Don't be afraid to ask for guidance and help. No question is silly. This is what we do for a living. This is our expertise. And so we're here to offer that support and guidance because we want you to be successful. Just like we would come to you for your expertise in your business, please rely on us for our expertise and guidance. That's what we're here for, and that's part of our mission as well. So with that, thank you, and I'll wait to see if there have any questions at the end. And then now I'll let Carrie come in and talk about a little bit more about the community-backed sources of funding.
Thanks, Leslie.
I'll unshare here.
Okay, you can unshare.
If I can get to the unshare piece. Okay, there you go.
All right. So here we go. Hey, everybody. All right, there's always that moment of, is this going to work? Okay. So thanks for having me today. I'm with the Community Investment Corporation, but as Leslie mentioned, I run a program in partnership with Growth Partners Arizona that I'm going to share with you today. But just Community Investment Corporation is a nonprofit economic empowerment organization, if you haven't heard of them. They do a lot of different things, but they also do some micro lending. They do small business loans. So I would just say, you know, I'm going to talk about something very specific today, but you can also go to their website and look at some of the other things that they offer. But yeah, I'm here today to talk about this concept of community capital. And that is really, well, I guess to back up, I started at CIC about a year ago now. And the idea was, how can we look at alternative funding models? And the real driver behind that is these specific kind of models, which are based in community capital, meaning people in the community actually contribute to loans or invest in local businesses that they believe in and want to see in their community. So I'm going to talk mostly about Kiva. If I have time, I'll touch on another one that we have called WeFunder that is slightly different platform. So Kiva is, it's been around for a while. They haven't been as active in the US until like the last few years. But they were created as a platform for small businesses to get their first access to capital. And I think Leslie was talking about this. So the Kiva is really the first rung on the capital access ladder for a lot of people because they don't do typical underwriting. They don't do, like, if you have a low credit score, you can still apply for a Kiva loan. You don't have to submit like a lot of financials. It's really just kind of some very basic stuff. But the real way that Kiva works is social underwriting. So your community is actually showing that they will invest in you. And that's how Kiva has kind of evolved into this platform where you can get a loan funded by the ecosystem. And the exciting thing about Kiva is that it is 0% and there are no fees. Currently, they have a 6-month grace period that was created because of COVID. I don't think that's going to go away anytime soon. So that's also a really great thing that they have. But I guess generally, I would say Kiva is with the social underwriting, you know, you get on the platform and you can get approved for a loan, but you go through 2 phases, and I'll go into a little more detail. But the first phase, you actually have your network of people contributing to your loan up to a certain number. The smallest amount they contribute is $25. And then if you reach that, it's like a first threshold, you get put on the larger Kiva platform where they have 2 million people that could potentially contribute to your loan. And we have seen in Tucson, people from all over the world are contributing to campaigns that we've launched here. I think Leslie also mentioned this, but the loan amount size ranges from $1,000 to $15,000. It really is, it's sort of up to Kiva to determine what amount you get approved for. So you can request 15K, but they may tell you, you know, at this point, we feel like 10K is really what we can approve you for. But some people do get approved for 15K in their first loan. So it's definitely, you know, request as much as you need. I think I've already covered some of this. The only thing I would say here is to, once you're applying, if you're in Cochise County, Pima County, or Santa Cruz County, we will automatically see you kind of come into our portal. And my role in all of this is really to help you get through the application process, because Kiva is, it's very much about creating this forward-facing story about who you are, who your business is, why you're excited about your business, what you've done, and how connected you are to the community, and how you present yourself, really. So there's like an image that's very important. And those are the things that actually inspire lenders to contribute to your campaign. And so my role is really to help you work through that process and make sure that you're telling a story that is, you know, is a good narrative, and I can help pull information from you to make that better. I'll give you feedback on your photo, some basic stuff like that, but also know that, you know, I'm here to help you get approved for as much as possible, as much as you would like. And we'll, you know, it is up to Kiva in the final say, but I'm your resource to get through the application process. And I think the other thing I would just say here is there's different like brackets of the loan amounts. The terms are different based on the amount of money that you're borrowing. So the amount of time that you would have to pay off the loan varies. Kiva has done a little bit of shuffling with the amount of lenders you need in private fundraising. So these numbers aren't exactly accurate. It's almost like they're experimenting a little bit. So I would say like it can be anybody, anywhere between 5 people and 40 people. And when you apply, we actually will know how many people that they need for you to contribute to your private funding campaign. So that's something that we'll figure out when you're going through the application process. Just a little bit of progress I wanted to share with you. We have 23 successfully funded loans that we started in March of this year. And that's nearly $200,000 of funding that's raised. And it's kind of just coming out of the ether in a way, like the people in the community have contributed to these loans. People all around the world have contributed to this amount of money. And I think it's significant because it's something that, you know, $200,000 against 23 different businesses is a huge deal. And I'm really excited that we were able to have this platform here in Southern Arizona and to provide that funding for people that otherwise wouldn't have been able to get funding. I think the other thing that's significant is that 68% of that funding has gone to women-owned businesses. Kiva is a great platform for people who have typically been, cut out of the standard lending process, or maybe are more comfortable with this type of lending. We just see like there's a huge amount of women that are very successful on this platform. It doesn't mean that men are also not successful, but I think it's just an interesting statistic because it's very different statistic when you go to traditional funding platforms. And some basic eligibility stuff. The business needs to be in the US. You have to be 18 years old. The debt to income ratio is really one of the main financial things that Kiva looks at. It needs to be lower than 80%. However, lower than 50% is the target. I would say, if you have something closer to the 80% range, you may not get approved for very much of an amount. So if you're in that range, just be prepared. Like you may not get a large amount approved, but we can still work with you. Certainly, you shouldn't be in bankruptcy, not a registered sex offender or terrorist. no violent or financial criminal convictions in the last 5 years. However, you can be formally incarcerated. That is also something that I think Kiva, offers for people who, again, that's typically makes it more difficult to get access to capital. So Kiva is an option for that. And you have to have a PayPal account, just because PayPal is a partner of Kiva. That's actually how they are able to provide 0% zero fee loans. You also, if you're borrowing more than $1,500, you need to have business proof that shows, here's my business name and my name and the address of the business on like any kind of document, like a permit, incorporation documents, some kind of registration that you've done with the county or the state. But that's pretty straightforward, and I can help you work through that as well if you're trying to figure out like what exactly do I need. But then, I just wanted to walk you through the application process to show you how simple it is. So I will share this presentation after, and you can go and check out the link in this document if you'd like. Or Leslie, if you want to post the link in the chat while I'm chatting, that would be great. But basically you go on the site, you click on start an application, and you really just start answering the questions that are in there. There's a few on financial health of your business, but again, they're very straightforward. What's your revenue? What's coming in the door? What's going out the door? And then, that's kind of, well, that's one part of it. And I also mentioned this, like this photo, for example, is a good one. It's, you can see who the borrower is with the tagline. It's also important to show what your business is. This one's cut off a little bit, but she actually, I believe, is like either a jewelry maker or she's making something, but I can help you with that too. Like we need to be able to see in the photo what your business is. The other thing you have to do in your Kiva application is describe what you're going to use the money for. Leslie was touching on this too, I think, in the work that she does. What are you going to do with this money? Why do you want this loan? These are some common ones where you're buying equipment. Some people during COVID have said, I needed to upgrade my e-commerce site. I didn't have any of that. I needed to change my marketing messaging. I need some working capital, right? So to sort of get through COVID, that was a common one that was allowed for Kiva. I need to pay for my space. I'm paying my employees. Those are things that are allowed within a Kiva loan. Some things that aren't allowed are like a down payment on another, on another business. That one I've seen that didn't actually work, or like down payment on a building. Those are things that Kiva has a hard time approving because it's like they want to see that your business is sort of already in the works and up and running and that you have the things you need, but this is just going to help you get a little further. Kiva will on a case-by-case basis look at new businesses. It is a little more difficult, I would say, but I have seen plenty of new businesses get Kiva loans. They may not be approved for the full 15,000 if that's what you were looking for, but I think it's certainly an option if you're looking for, you have an idea of what your business is and you need some startup capital. There are ways that Kiva can support that as well. And then I mentioned this, but I just wanted to show you kind of visually so you see like this borrower has a $10,000 loan that he's raising. He's in his private fundraising phase, and he needed to get 20 people to contribute to his loan. So he's almost to that point where it will go to the public fundraising phase. And then that's when, everybody around the world, and there's lots of like foundations and things that also contribute to Kiva loans. So there are a lot of people who are kind of dialed into contributing to this loans, which is really exciting. We've seen loans fund pretty quickly in the ones that we have launched here. And then, so now you can see that in his loan, he's actually gone into public fundraising. This shows that he has 24 days left. Actually, to touch on that, you have 15 days in the private fundraising phase, and then you have 45 days in the public fundraising phase to raise the money. People always ask, like, how long does it take to get the money? It all depends on how quickly you raise it. So if you really blow through like the private fundraising phase quickly, and then you go to public and you're really promoting your loan to your network continuously, you can raise, you know, in a week perhaps, but some people we've definitely seen that it takes the full 45 days. So certainly I would prepare myself for that being the case. So if like you need money in a week, this is not the solution for that, but you know, I think just because of the process, but certainly there are ways we can help you accelerate your fundraising with, you know, different tips and techniques that we've seen work.
Carrie, this is Leslie. Would you talk a little bit about the concept of raising money, that this is not asking for a handout from people? You're asking people to invest in your business with you, and they will get paid back. You will pay the loan back.
Thank you, Leslie. Yeah, so I think before this session, I had this idea that I should create a chart that shows the different crowdfunding platforms, because certainly when COVID hit, I saw a lot of GoFundMe campaigns launch. Kickstarter is another one. There are lots of platforms where you're just donating money and you're not going to get that money back. GoFundMe is a great example of that. Like, unfortunately, a lot of people are using it to fund medical care. It's truly a donation. Kickstarter is a platform where, you know, a lot of times if you're contributing to a campaign there, you're going to get some kind of product or like t-shirt or something. That's also different from Kiva. So Kiva, people who are contributing to your campaign will actually be paid back fully once you pay off the loan. And so when you're going, there's sometimes I see hesitation in people saying, well, I don't want to go ask people for money. You're not really asking them for money. You're saying, do you have $25 of idle capital that you can contribute to my campaign that I will pay you back? Like when I get this loan paid off, you will get the money back. So I think that's a good distinction for people to keep in mind. Like, it's a lot easier, I think, for people to contribute when it is a loan. It's a different kind of mindset, and you're not asking for a handout. And I think that's why Kiva is such a great platform. And I think I'm at time, so I will hand it over to Amber. And then if there are any questions, I think this is the end anyway. So if there are any questions, I can answer them at the end.
Carrie, I have a quick question. I think we need to plug it in right now is, with Growth Partners, you guys are representing Southern Arizona, but where else in Arizona can businesses get a Kiva loan?
Anyone can apply for a Kiva loan. If you're in Cochise, Santa Cruz, or Pima, I will be like your contact. If you're in Phoenix though, and you apply and I know about it, I can actually ask you to get in. I can ask Kiva to put you in my portal where I can help you get through the process, but I will automatically be like your contact person in those counties. So anybody can apply for a Kiva loan though.
Okay, so it is available throughout the state.
Yes.
As an option. Great, thank you.
And I will stop sharing.
Good morning, everybody. I'm going to go ahead and share my screen. All right. Oops. All right. Can you see me okay? All right, perfect. So good morning, everybody. My name is Amber Cordoba, and I am the Director of Business Education and Consulting Services for Prestamos CDFI. So we are actually a part of the 51-year-old nonprofit organization, Chicanos por la Causa. If you've been in Arizona for any length of time, you've probably driven by a property or heard about us. And we provide direct services in 5 different areas of impact through health and human services, housing, education, advocacy, and then economic development, which is the pillar that Prestamos falls under. I know that we have a Spanish name, but we serve everyone and everybody, so don't let that be any kind of deterrent. We are an SBA microlender and a mission-driven lender, and we do provide small business lending anywhere from $1,500 all the way up to $1 million. And we also provide quality business education and consulting services that we feel is necessary to empower the small business community and create opportunities for economic growth and advancement, especially in the state of Arizona. So in terms of funding opportunities, the first 2 rounds of PPP funding we participated in, we did over 925 loans and we did 26 million. I wanted to bring this up because there are a lot of talks about a 3rd round coming down. It's something that's being talked about in Congress right now. We're very hopeful that they're pretty close. And I did want to mention for anybody that would be looking to get a PPP loan or getting a second PPP loan, that there's probably going to be a qualifier that you have at least 1 month over 2020 that will require you to have a 30% deduction in sales. We're not 100% sure how you would show that yet, whether it's going to be through profit and loss statements or that would be through bank statements, but that's something to be prepared for, that you will need to justify a loss in sales. Right now, as Robert mentioned at the beginning, the EIDL loan is still open for a couple of weeks. That has really favorable terms of 3.75% and up to 30-year repayment. So that is definitely a good program to look into. There are other forgivable loan programs that are city or county based out there. I don't know that there's much going on in Phoenix or in Arizona right now, but keep abreast of that, especially as different types of funding comes through, as Congress passes new different stimulus packages, that cities, municipalities might get access to some more funding, and some of that will go to small businesses. For us in specific at Prestamos, as Leslie talked about before, we're also a community development fiduciary institution, a CDFI, and an alternative lender. So we are able to work with small businesses that may have difficulties in accessing capital through a traditional bank like Wells Fargo or Chase, or one of even our state banks here that we have in Arizona. So we've put together a suite of new microloan products that I will go into a little more detail about. It's up to $50,000 with flexible underwriting terms. And then after that, I'll talk a little bit about what you're going to need to bring to the table, which will kind of just be an echo of what Leslie and Carrie mentioned about their products as well. So we just this week actually launched 3 new products, the mini, the mid, and the mega. Sorry, we couldn't get more creative with the naming structure there. But the mini microloan is $1,500 to $5,000. And that mid is the $5,001 to $15,000. And then the mega is $15,001 to $50,000. Now, remember, we do lending up to $1 million, but the SBA microloan program only goes up to $50,000. So those would be a little bit different products with different underwriting requirements. I'm bringing this up because we've decided to, even if it's just for a short time, relax our underwriting requirements. So this mini loan is going to be the most favorable for underwriting. It's going to only require 1 year in business, a minimum FICO score of 600 with no open collections. The interest rate is going to be as low as 7%. And this can be an unsecured loan. It will require a general UCC filing for your assets, so that if you do default on the loan, that if you have equipment or other things, that would be used to secure it. But it won't require a vehicle, or it won't require real estate. Now, as you get into those higher brackets, the mid microloan would require collateral and vehicles as long as they're paid off and they are within 7 years or less than 7 years old, or for commercial vehicles under 10 years old. And then for that mega microloan, that will require real estate collateral for anything that's over $20,000. So each of these loan programs have different terms, and the lowest term would be 12 months, and then the larger amounts are up to 5 years. The mid and mega are going to have a couple of months of interest only lending, and then the more you take, the less the rate is, but there is the requirement of that 600 FICO score and no open collections, no tax liens, anything like that. We are able to look at situations and look at the full picture, but that's kind of the bottom basement threshold that we're looking for. And then for anything over 5,000, you will need to be in business for at least 3 years. We are really not doing any startup lending right now unless it's a business that really is catering towards the COVID pandemic. So if, for example, you have a cleaning company and you already have contracts and you're a brand new company and you need some working capital, that might be something that we could consider because it makes sense. But if you are a restaurant that's trying to open up in the middle of what's going on right now, it's probably going to be pretty difficult for you to find lending because it's an industry that's struggling right now. So these are our new microloan products that we're launching this week. So there's that. Just to kind of echo what you're going to need when you apply for a loan, you're going to have a completed application. So that's going to be the ownership information for anybody who has ownership in the business. Typically, we like the ownership information for anybody that's 10% or more. And then all of your business information. So when did you start? What's your federal tax ID number, information about how many employees you have. You'll also have to provide collateral information for any loan that's over 5,000. So that's going to be a vehicle, if you have equipment, if you have real estate. You'll also be required to provide insurance information on the vehicle or on your real estate. And then you'll also have to have a business plan and a COVID-19 pivot plan. This is something that Leslie mentioned as well. It doesn't have to be a full 20+ page business plan, but an executive summary that talks about how you operate your business. And then your pivot plan needs to be that you recognize that COVID-19 is here, that while we have a vaccine that's on the way, it's not going to be something that solves the problem immediately. So what are your plans? How have you adjusted? Did you start an e-commerce site? Have you started curbside delivery? Are you doing unique things within your store to order, in order to continue to bring on business? So that's what we're going to want to see. And then for financial documents, if you're doing the $5,000 or under, we're only requiring 1 year of tax returns. And then the higher up you go in the funding, you'll be required to provide up to 3-year tax returns. And that would be personal and business. For small businesses that file a Schedule C, that's on your personal tax return, that's sufficient. You will also need to provide a year-to-date profit and loss statement and a balance sheet. So as Leslie mentioned, if you don't have any of your financials, maybe you only do them once a year when you go to your tax preparer. That's something you really want to be thinking about, is getting that done sooner rather than later and getting onto some kind of accounting system where it's a little bit easier for you to get your financial statements on a regular basis. Any of the funding that's going to come down, that could be grants, that could be lending, you're going to have to provide financial statements and justify that you have the ability to repay your loan. As a CDFI, we get funding that we actually lend from other banks or other types of businesses that lend us at a particular rate. And then we re-lend it to small businesses and we provide technical assistance in conjunction. But at the end of the day, we have to pay that money back. So we're looking to make smart investments in businesses that are also going to be able to pay back their loans as well. You will need to do a personal guarantee, and you will also have to provide a personal financial statement. And if you have outside income, then that can also help to be a part of your repayment plan and help with the underwriting process to let us know that if for some reason something happened with the business, there is outside income from you or a spouse that would help towards repayment. And then there's also a requirement for 2 years projections and assumptions. So what do you plan to happen in the next 2 years as best as you can? And what is that assumption based on? So are you open 10 hours a day and you generally have 10 customers a day and the average sale is $20? So that's how you come up with what your projected revenue is going to look like. And then you'll also need to provide a debt schedule. So if your business has any other kind of debt, if you have another SBA loan, if you have an open PPP loan that hasn't been forgiven, if you have other types of loans for your business, we're going to want to see that because that will also factor in. And then in terms of the qualifications, you do need to be a US-based business. Again, a 600+ credit score with no open collections or a strong plan for how you're repaying open collections. For the lower end loans of up to 5,000, as long as you're in business for 1 year, then that's acceptable. For a $50,000 loan, we're going to want to see at least 3 years in business. And then in terms of debt service, that might not be a term that a lot of people are familiar with, but that's for every dollar that you spend, you need to bring in another dollar to break even. Most lenders like to see something around 1.2. We can go as low for the smaller dollar loans as 1.1. So for every dollar you spend, you earn $1.10 and have a 10-cent profit. That just shows that you have the capacity to repay the debt. As in terms of the purposes, as Leslie mentioned, it does need to be a productive purpose. We're not looking to be able to lend to businesses that it's just basically going to keep you afloat for a couple of months and you're not going to be able to repay. We're talking more, you need to have an upgrade to a software. You want to add a drive-through window. You need a new piece of equipment that's going to allow you to produce a new type of product or streamline your efficiencies. General working capital, maybe you got a new contract and it doesn't pay you back for 90 days, but you need to purchase some materials or you need to hire a couple of employees. Those are some good uses of capital that you would be qualified for right now. I do want to mention that it's really important to have technical assistance coupled with access to capital. So we provide that as well. For any of our micro lending that we do, we have SBA technical assistance program. We have a team of 13 business advisors and subject matter experts that do ongoing coaching and education for our microloan recipients. We also have a program through the SBA called Prime, and that's programmed to invest in micro entrepreneurs. It's training, coaching through webinars, workshops, one-on-one coaching, and it's topics from like, what's the best bookkeeping system for me, how to actually use and create a profit and loss statement, understanding marketing, social media, general business coaching. There's a ton of information on our website about it, but both of those programs are no cost. And the Prime program, again, does not require a loan. You have access to that if you are a small business. We are giving preference to businesses that have 9 or under employees and businesses that are in underserved communities or that are disadvantaged. And then we also have a social enterprise incubation program that does have a lending component. If you are a social enterprise or you specifically are hiring in a hard to hire demographic, so perhaps you specifically hire formerly incarcerated individuals and you have a program that can be considered a social enterprise as an employer social enterprise. And then benefit social enterprise is a business that does social good and that gives back to the community. So there is lending through that program specific. It's at a significantly lower rate. It's around 4%. And we have incubation services that we do that has ongoing coaching, education, specifically for social enterprises. So it's a program. And then I wanted to spotlight one of the clients that we worked with back in the beginning of this pandemic. We had a COVID-19 microloan that was up to $25,000. But this business was established in 1996. They'd been around in South Phoenix for a really long time. We were able to give them access to $5,000, which may not seem like a lot, but for a lot of businesses, $5,000 is a huge investment for their business. They participated in our technical assistance program and we helped them understand financials, gave them coaching, social media and marketing training. And they actually had a better October this year being in retail than they did the prior year, a 9% increase in sales. So that's why we say that when you're getting access to capital, having that coaching and technical assistance component along with it to help you really make sure you're maximizing those dollars is really important, and it's a great asset and it's a great part of the S program. So if I'll put my information in the chat and I'll put a link to how to apply for a loan. You can reach out to me. And then also the Prime program, if you are interested in getting access to that technical assistance, you can apply there as well.
Excellent. Thank you, Amber. Thank you, Leslie. And thank you, Carrie, for your presentations and sharing those lending products that a lot of businesses may not have known about. So we very much appreciate that. I don't see any questions in the Q&A box at this time. Now, a question I do have, and I mentioned it to Carrie about the Kiva, but Amber, are your loans available to anyone across the state?
Yes, we do small business lending in the state of Arizona and in Nevada. So if somebody had a business location, and then later, well, in 2021, we'll be expanding into Southern California as well.
Okay. And Leslie, what about Growth Partners?
Growth Partners Arizona does serve nonprofits and small businesses statewide.
Excellent, excellent. So again, great programs. We are getting close on time, so we will go ahead and wrap up. But we're glad that Leslie and Amber and Carrie could join us today and share these products, because a lot of people just think they need to go to their bank and get a loan, or they put the funding on credit cards with crazy interest rates, or they go to not as reputable lenders that charge crazy interest rates that you can never pay off. And so there are loan products available for small businesses that can help you, with those micro loans, a few $1,000s here, that's all you need, or, some of the larger ones through the SBA, and these organizations can help out. So we're very grateful that they could come on and share the information. This session is being recorded, so we will post it back up again if there's something you want to go back and see. As well, the slides that each of them used will be posted on our website with the recording. So you'll have access to all this great information. Again, Leslie, Amber, and Carrie, thank you for joining us today. Thank you for your expertise and the time you put in to help share this information on the boot camp. With that, we will go ahead and wrap up. We want to invite everybody to join us next Tuesday for our next boot camp session. And we wish everybody to have a great weekend. Be safe. Enjoy the rain, but be safe in the rain. And we will see you on Tuesday. Thanks.
Thank you. Bye-bye.
Thank you.
Have a great day.